All right, what's good, family? It's your boy, Chike Investing, back with another episode here on my YT channel. So here's what we're going to be doing, right? It's a daily NQ session. We're just going to be reviewing daily NQ, ES, and what happened today. Maybe discuss some of the trades that I took, some that I should have taken, some that I shouldn't have, ones that I'm glad I took. All right, and just doing a general daily review. So without further ado, let's get started. First thing I would say is please make sure you press that like button. You can press it like right now. Just tap it for me, please, because that is just the form of, hey, this is the way I'll support you, Chike Investing. I don't want to ask for any money, but just a like button would be nice. And also, you can press that subscribe button too. Subscribe. It could be valuable content for you. It could change trading. So let's press that subscribe button. That'd be great. But without further ado, let's get started, right? So, daily NQ breakdown. Let's start from the daily time frame. Okay. So on the daily time frame today, so let's just forget this candle right here. We're looking at this candle. Going into Friday, had a big wig up, took out some liquidity above here after purging these lows with this candle, right? But then came back into the range and ended up closing on the week inside this weekly civvy, which is this level right here, consequent encroachment of the weekly civvy, and this level right here. We ended up closing around the consequent encroachment of the weekly civvy. So that now makes it 50-50. Not sure what we're going to get this week. We had a pretty interesting day today where we rose, but then came back and closed lower on the day on this candle, closing below the consequent encroachment of this wick. So not entirely sure what we can see going into tomorrow, right? If we had closed above this wick, I would have been bullish. But now we just had an inside day on this previous day high and previous day low. So this is what we call a volatility candle, where the next day should be explosive in one direction or the other. So we could see this previous day low taken out, or we can see this previous day high taken out here. As you can notice, we have this NWOG that I kind of want to don't put on the daily time frame or the weekly time frame. We'll get into that on lower time frames. So that lower. And honestly, I'm only going to want to see that basically on the 1 hour, start on the 1 hour. But we came up and we closed inside. All right, so we're still inside this weekly civvy and we're still inside this daily civvy as well. We're actually in the lower half of the daily civvy. This is the consequent correction. That. All right, so this is going into London session right here on the 4 hour. What do we have? Friday PM, we reacted up this 4 hour busy, grew higher. I would have thought this would be the next draw on liquidity here. We couldn't make that. Going into the AM session, we reversed heavily into this 4 hour busy right here and retracing into this new week opening gap, right? Not even closing it in fully, but not closing it in fully, but closing within the top range, upper portion, and we'll probably see that fill in overnight or going into tomorrow morning. All right. And look here, we had this aggressive bearish order block form, and then this wick candle came back, tapped it, then went lower, right? Because we had only touched the upper half of this NWOG. I want to see this completely filled in to rebalance this area, or we could see it keep it open, and then I'd be pretty bullish if we started expanding heavier away. We also closed we closed through, I believe, this 4 hour fair value gap right here. The reason why I have this whole level closed is because this is a volume imbalance right here and a fair value gap paired together. So that is the entire fair value gap with them two combined, according to ICT. You can even see how we're interacting at the consequent encroachment of that level. That's how you know that this is actually the fair value gap. And we now close through that. So this candle, we could see overnight or going into tomorrow, some more bearish price action, right? Especially after taking out all these levels. We come and probably see some of these levels taken out below here. We'll just have to see what the market gives us. On the 1 hour, let's just see if there's any SMT. There wasn't really any SMT. Okay. On ES 4 hour, we didn't see much either. Basically similar price action. On the ES, we still have not seen that NWOG filled in. So going into tomorrow, we could see ES pretty bullish, given that NQ has filled its own NWOG. And right here, NQ has already filled it. So because ES still has a way to go, we could see NQ coming even further. That's something I probably want to see. And now I'm going to have these tomorrow. I'm going to keep these previous day high and previous day low levels because we didn't take it out today. So, those levels are going to still be pertinent for tomorrow. We could probably see this previous day low taken out. That'd probably be what, if we put a gun to my head, that's probably what I would want to see going into tomorrow. On the 1 hour, going to Asian, actually overnight here, Friday coming into Sunday's opening, a pretty large move during this Asian hour session, about 150 points or so, a little bit over that. So that could be a predictor of, pretty crappy AM action. Plus today, remember, Monday, we had no news today, October 28th. We had no USD news, right? Plus, it's a Monday, so we could expect to see some pretty choppy price action. Price didn't really do much going into London. And then starting at 8 a.m., we retraced back into this bearish order block, which took out these highs and made a propellant block here. Notice how the wick is really sensitive in propellant blocks, right? We don't want to see it closing through the consequent encroachment of this particular wick or this mean threshold of this order block. That would be really bullish. Of that propellant block should propel price lower, which we see an immediate rebalance here. Bearish order block forms, closing through the consequent encroachment of this wick. We come back and retap this order block, but close, bearish into it. We do slightly, come back and retrace just above the CE of this wick right here. But notice that the next candle sharply reverses. That is an indicator that we are still very bearish. And that was just a short-term retracement that retraced a little bit too much, which is characteristic on days like today where price action is not anticipated to move the most cleanly. On the 15-minute, have this opening range gap, right? If you look at RTH, that is these levels right here from this low all the way to this high. The reason why it doesn't look exactly like that is because I actually draw my RTH from the 1 minute. To be more accurate. Oh, actually, sorry. I actually moved it. I accidentally moved it in the middle of the day on my phone. Give me 1 second here. In 1 second, guys. Oh. All right. We're looking at the 15-minute here. All right. So 15-minute here. What do we have coming into the AM, right? We left this whole new week opening gap open, which could have been the draw on liquidity today. Plus, you have these relatively equal lows right here. Probably see us taking this out. Plus, you got this low, this fair value gap here on the 15-minute. And this is the opening range gap from Friday, which we did not completely close in, but we did on ES. So this is a level I could see us closing in going into sometime this week as well all these LRRs plus these equal lows right here. I mean, price is really going to prove to be bearish, especially how we saw on the 4 hour. There's bearish price action, but here it can be even more confirmed by lower time frame pricing. So we could see price maybe come back up or take out some of this liquidity and then fall lower. And so on the 15-minute, we see some consolidation going into London. We take out this high. And then we reverse, come back up here pre-market, pre-930, retrace back to this order block and this breaker. Then we trade through this 15-minute inverse fair value gap. right, only come back into this SIBI portion. By the way, this is a 22 model on the 15-minute. I actually wanted to take this today, but the range is too large. I didn't want to hold it for that long, especially given that it's a Monday. And look how crappy price action was throughout the day. But going into 9:30, open, we created this large gap SIBI, and returning back to the constant encroachment of this ORG, bounced from that level, returned up here to this 15-minute breaker, and are inside this 15-minute fair value gap, right? And we just come shy of the low of this 15-minute inverse fair value gap, and then we trickle lower, right? Going into lunch, we have a retracement up, but then break market structure lower again, come back and touch this wick rejection block, and then end the day lower around the consequent encroachment of the new week opening gap. On the 5-minute, the price action is a little cleaner. Pre 9:30 a.m. We come back and take out some of these relatively equal highs and LRs back on this particular move. We're tracing into this BISI right here. We're tracing into this BISI. I'm going to take this off as well. Going higher, tapping an old 5-minute SIBI over here to the left. Breaks market structure lower, going into 9:30, drawing into the ORG. Come back up into this 5-minute SIBI that is paired with this breaker, right? This is also a 22 model on the 5-minute. Price is reacting in there, then it reverses. Okay, we have another 22 model form right here. And at what time? This is about 10:50 a.m., right? Price returns there. That creates a nice 5-minute 22 model, and price starts to trickle lower, consolidating towards the new week opening gap for the rest of the afternoon session. Okay. Let's go to the 1 minute. Okay, on the 1 minute, one thing I want to draw our attention to is look at how price action was between 7 a.m. to about 9:30 open, right? Like just way more clean, elongated candle moves, right? Like you can see these clear draw on liquidity here, clear liquidity spikes here. Price is making nice movements, right? Like really nice 22 model going into 9:30 open. But as soon as we get there, I mean, price just starts being trash for the rest of the day, right? A couple reasons why this happened, and it's because of Monday, no news, right? Monday with no news, when you start to see candles like this start forming, you don't really see any real direction price action. You can just close your charts. It's gonna be a tough day, right? Both the AM and the PM. Also, we had a large movement right overnight with this NWAG, right? And when you start to see these things form, it's like, yeah, all right. Monday, no news. We have a lot of news throughout the week. It's probably not going to get the cleanest price. Actually, you might as well just wait. Definitely lower your risk if you feel the need to trade. And especially on days like this, these are the days where you want to rate really for like a very clear end of the beginning of the hour macro when the new candle is forming on the hourly, right? Where we're going to take some liquidity. Those are the times where you probably see the most cleanest trades, but even so, like you can just see this is all just pretty much garbage. I don't even know if it's really worth going over, but let's just do it, right? So we come up here, we retrace, we take out some of these moves over here to the left. We finally break market structure over here, 922 candle, reject from this 22 model SIBI, fall lower, 930, we come right before 930, we come right back into this SIBI, but then break lower, and then price actually just starts to become trash, right? Going all the way until 950 to 1010. Didn't really get any clean price action either. If you're not seeing clean price action at the macros, it's probably just gonna be a very choppy day, right? You see the 22 model form right here, right? And actually, this area is actually a 15-minute fair value gap. So on any normal day, this could have been a really valid trade, right? Where you're taking out this high, you return to this 1-minute SIBI and a premium, right, of this particular move. And then you have the drawn liquidity lower, which is the new week opening gap that was left open, right? But price ends up just trading right through the 22 model. Things like this, because of the things that we discussed on it not being high probability, you don't want to be entering on trades like this, especially not around the macros. Because even look here, 1050 is when we really got that move lower that you would have wanted to see. until 11:10. So it's better to, especially if you're on a trade on these days, you really just want to wait until about 10:50 to 11:10, right? That's where you'll typically see the move. Not even around 9:50 to 10:10. It's really around that 10:50 to 10, 11:10. Usually just the market will just chop around for the first hour and a half of trading. All right, and then we taper off, really bad price action for the rest of the day, but just going lower and lower towards the consequent coaching of the new week opening. So this is today's NQ review. Let me know if you have any questions, comments, or concerns in the chat. Don't forget to like and don't forget to subscribe. Thank you very much.